Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today our guest is Jim Pfeifer. Thanks for being on the show, Jim.
Thanks for having me, Whitney. Happy to be here.
Jim is one of the founders of Left Field Investors, a group dedicated to educating and assisting like-minded investors negotiate the nuances of the passive investing landscape and world of syndications. Jim is a former financial advisor who became frustrated with the one-path-fits-all approach of the standard financial services industry. Jim now concentrates on investing in real estate assets that produce cash flow and is committed to sharing his knowledge with others who are interested in learning a different way to grow wealth. Jim, thank you again for your time. I've known you for a while. It's grateful to have you on the show. And so get us started, a little bit of your background. I know you had a financial advisory background, but then, was that real estate, or did you do any real estate then? What got you into real estate? Give us a little more context there.
Yeah, thank you. So I started in real estate accidentally, but I'm kind of on career number 4, I would say. I was in business for a while. I was a teacher for a while. I was a financial advisor for a while. And now I'm just an independent guy investing in passive syndications. But when I started, I call it an accidental landlord. We we bought a new house in 2008 and we couldn't sell our old one. So we rented it. And we did that for about 5 years, and I was the property manager, and I did not like it. So I went to sell that house because I didn't like, having to go over Christmas Eve to fix a toilet, which did happen. And my realtor said, "Hey, why don't you let me manage it for you?" And so I said, "Okay." And so he did. And then he convinced me to buy 2 more properties, and I did. And I still own those properties, and they're making money. That kind of got me into real estate. And so I was the guy with shiny object syndrome. I went and bought turnkey investments. I bought a 22-unit multifamily building. We did a flip, and I joke because that flip made us hundreds of dollars. And if you know about flipping, you should make much more than that. So I was all over the place until I kind of found syndications when I was at a seminar because I thought I wanted to be a syndicator. I went to the seminar and I learned, no, I want to be the passive. I want to invest in other people's syndications. So I did, and I started out kind of investing my self-directed 401k in a bunch of different syndications that gave me a lot of lessons about what I don't want to do. And over the past 2 years, I've learned and I've focused, and now I know the kind of syndications I want to be in. And so now I'm much more focused and on the right path, I think.
Nice. It's just interesting to hear how people get to the syndication business for sure. If you say syndication to somebody new about investing, I mean, it's like, there's no clue what that is. And so, it puts up this big wall a lot of times, but you dove in there, you learned about syndication, learned you wanted to be passive. And so Jim, let's dive in a little bit. How do you help, or let's first say, how did you navigate the waters of just learning syndication? You said you invested with your IRA first. You learned a lot of what not to do. What were some of those things? So now, you've been more successful investing.
Yeah, well, originally I don't want to get too technical, but I had a self-directed IRA, which, it doesn't really make sense to invest in leveraged investments in an IRA because you'll pay the UBIT tax, which is a tax inside your IRA. So when I first got it, I had a bunch of money in a rollover, and I was super excited to get started. So basically, everybody I met at this syndication seminar, I'm like, I'll invest in your deal. I'll invest in your deal. And I wasn't really looking at the deals. I was just trying to get started. And while that's not the best strategy, I also think it's a good strategy sometimes to just take a chance, try something out, and see if it works. So that's what I did. And the investments aren't horrible investments. They're just investments that aren't paying out like they should or on time that they should. And I'm fortunate because that's in my retirement account. So that they're playing out slower than I thought, it doesn't really matter. But now I'm focused on real assets that produce net income for me, and that's what I'm living off of. So my strategy there has changed for sure.
Okay. Well, tell me though, So are you still focused on, using your IRA, or are you more, not too focused on using your IRA? Anything specifically that you could recommend about that process before we move on?
Yeah, so I converted my IRA to what is, I guess, called an EQRP, or a self-directed 401k. And that, for some reason, the tax code, you're allowed to have leveraged investments in that. But you still lose out on depreciation and other tax advantages of syndication. So right now in my self-directed qualified account, I'm only doing private lending or any kind of debt structures that don't have these tax advantages that you do have in the other non-qualified accounts.
So let's hold off right there just for a minute. So like the EQRP, it's something that's kind of, maybe it's not new, I don't know, but it's new kind of to being known in the industry. I feel like to a lot of people, or you hear that term and it's like, well, what in the world is that? What would you advise now to the investor listening that's saying, oh, wait a minute, Jim, I've thought about using the EQRP, but I don't know if that's what I need to do or not.
Yeah, I would say that if you have a rollover or 401k that you can put under your own control, I don't think it matters if you do a self-directed IRA or an EQRP if you're just going to invest in or you're just going to do private lending or debt instruments, things like that, because that's what I think belongs in your retirement accounts rather than the syndications that give you all these tax benefits. So I would say it doesn't really matter which one you do, but you get the money in your control. You can still invest it however you want in the market or in real estate or whatever. If you really want to get into syndications and the only thing you have is your 401k, then I would definitely recommend the EQRP or solo 401k, because those get you around the U-bit. And I would say it's better to have some real estate than none. So I would still be okay knowing that I'm going to miss out on depreciation, some of the other tax benefits, but at least I don't have the U-bit in the solo 401k.
So you would say, definitely transition it to an EQRP, if we have a 401k or something like that. So we have that checkbook control, but maybe use it for something other than syndications, like, hard money or something like that.
Yeah, and there's actually syndications you can do that are just lending, that are just debt. So I would find some of those, or I run a couple of local real estate meetups, and there's plenty of flippers and buy and hold people who I learned, once I get to you where I know, like, and trust you, then I can loan money to you. So I do that in just individual loans to people as well, and I do all of that through my retirement accounts, because there's no tax benefit to doing it elsewhere.
Give us a couple details on how you document something like that, so you're just handling that capital properly.
Well, that's the first time I did it, I just took the other guy's wording and just signed the document, and it was somebody I trusted, so I don't have any regrets. But I just didn't want to spend lawyer fees. But now on the new deal I did, also with somebody that I trust very much, I decided I need to get real documents that are vetted by my attorney. So either I pay for them, or in this case, I asked the lender, or the guy I was lending the money to, I said, part of this deal is you're going to have to pay for my attorney to do the documents. And he was fine with that. But even if he said no, I would have spent the few $100s it takes to have someone go through and check the documents. I didn't do that for the first few deals, but it's money well spent. I haven't had any problems, but I will always spend the couple $100s that I've avoided all this time to get the right documents.
All right. So changing gears just a little bit, Jim, since you're helping many other investors now, just open their eyes to the syndication business. And, how would you say, or what's the hardest part of teaching them, what the syndication business is? How do you expose them to that and share, the great things about this model?
Yeah, that's a great question. I have a couple of different groups. One is the beginner group, and they're people who are friends or even a couple of former advising clients who've always told me, hey, I hear you're in real estate. I'd love to get into real estate. And they just might not have the capital to do a deal on their own. So with that group, we're just starting from scratch, educating all the way through. And we actually, in that group, through a company called TribeVest, where we invest our money together, we just invested in our first deal, our first syndication. There's 11 people in the group. None of them had ever done one before. We walked through it step by step. We talked to some different syndicators through, Zoom has been a blessing in that sense. And so we just went step by step and educated people on crowdfunding, syndications, the tax structure and everything, and went through the process. Then there's another group of people that are interested and know about syndications, but might be able to invest on their own because they have a little bit more capital. That group is kind of a little more advanced group. So we kind of just talk to each other. And I thought I would have all this knowledge to give and share with people. But I find that even when I'm talking to someone brand new, I learn something every single time. So the act of sharing my, what I call my syndication knowledge or experience or whatever you want to call it, it's just been given back to me, tenfold by talking to people that have a different perspective or don't really know about syndications. And I learn something every time. So I'm really surprised that happened and grateful for it.
Jim, before we started recording, you had mentioned, just like helping others and yourself just understand like real assets producing actual income versus paper speculation. And just wondering if you would highlight on that a little bit, and let's dive in there for a minute.
Yeah, certainly. I was a financial advisor, and, we were always, you're in the stock market or other products, and it was always these paper products that, at some point you're going to find somebody else to sell them to so you can make money. Now, there are some that, you can collect dividends off of some stocks, so there is that. But I'm a strong believer now in acquiring assets that provide you cash flow, because then you'll never have to worry about, you can quit your W-2 when you get enough, you can have retirement, all of this stuff, because these assets produce this cash flow. Well, also, if you're patient and on the back end, they also produce appreciation. But I never factor that into when I'm investing. I always think, okay, I'm just looking for the cash flow because this is what this is how I'm paying for my lifestyle, my family, and all that stuff. So I want assets that produce regular cash flow. That's my main focus. Now, there may be a time when there's some, I'm focusing on appreciation a little bit, but my main focus is I want an asset that's going to produce cash. That's everything I'm doing right now is focused on that.
What about how you start to vet an operator, or we could let's just talk about the operator a little bit. I feel like the operator comes first, before the deal. But how do you and your group look at an operator and determine, okay, this is somebody we can trust that we want to move forward with?
Yeah, absolutely. The operator is the most important thing. And as you know, I interviewed you as an operator a few months ago, and we haven't been able to get in a deal yet, but I'm looking forward to the time that we do. But the operator is the main thing for me. And we've developed through some of the books we've read and just talking to each other, we've developed kind of I don't know if it's a questionnaire, but just things to ask the operator when you interview them. And normally the interview lasts a half hour, maybe it'll go on for an hour. And usually most of those questions are answered by the sponsor saying, here's kind of how we operate. And then my thing is I just start asking the questions that they haven't answered and kind of get them into a dialogue. And that's how I vet them. Now, you can never know for sure. So I also ask for referrals and other, who do you know that I know? So you can kind of get the trust, because the bottom line is when you invest in one of these deals, it's the least liquid investment you'll probably ever make, because there's no getting out of it. The syndicator's complete control. You put your 25 or 50 grand in there, and now you just hope for the best. And you won't know if it's a good deal for 3 to 5 years, right? You'll see along the way, okay, are they paying when they say they're going to pay? Are they sending reports like they say they're going to send? So you can tell a little bit, but you're stuck in it. So vetting the operator is the absolutely most important thing. And our questionnaire, I think, does a pretty good job of it.
Bedford's Cost Segregation specializes in generating significant tax savings via their engineering-based studies for commercial real estate clients nationwide. Founded in 2002, Bedford is one of the largest independently owned cost segregation providers in the country, with over 14,000 studies completed to date in multiple offices throughout. The most important decision ownership can make when incorporating cost segregation within their real estate portfolio is selecting the right provider. With only 43 certified cost segregation professionals nationwide, Bedford is proud to employ 8 of them and takes the quality of their people as seriously as their studies. Every certified cost segregation professional has passed a rigorous test combining knowledge of technical engineering issues, legal tax issues, ethics standards, and requires a strict level of prior work experience to be eligible. Bottom line, not all cost segregation providers are created equal. So be sure to take the decision seriously from the beginning to protect yourself for years to come. Please contact Bedford's Business Development Director, Frank Judici, to learn more. Anything about the deal that you're looking for? I mean, what's your favorite type of asset class, or business model?
Okay. Yeah, like for most people are doing multifamily, mobile homes, self-storage, right? Those are the three big ones. And those are the ones I'm in also, mostly multifamily. I also have a company that I do triple net industrial leaseback, which is basically they buy the property from the property owner of an industrial place and they lease it back to them. So I really like those deals. But we developed a spreadsheet, again, from our book reading and other things, that at least for the multifamily, we haven't really gotten there on the other asset classes very well yet, but it has the top 20 metrics that we look at for each deal. And so we plug in the information from the deal sponsor they give us, and we just see, and this basically, the spreadsheet turns green if it hits the metric, red if it doesn't. And red doesn't mean don't invest. Red means ask a question. Like if someone's saying the IRR is 25%, that's awesome, but it's also going to turn red on our spreadsheet because that is higher than I would expect. So ask the question, why is your IRR so high? It's the same if they send me one with a 5% IRR. Why is your IRR so low? So we're just starting out with this, but this analyzer, or the deal metrics, it won't necessarily tell me, is one deal better than the next? It basically just says, this deal hits most of the metrics, and I've asked the questions I need to ask, and I'm comfortable investing in it. And so we've used it over the last, 2 months, and it's just helped give some confidence, because in the past, to be honest, and I've talked to other syndicators who are the same, they don't really have a way to analyze a deal, because the passives don't. You as a syndicator of the deal, you do all the underwriting and you dig into it. Well, I don't want to do that much depth. I want to have a screen where I can look at it and say, I found an operator I trust. I know he's got good deals. Now, how does this deal fit? Boom, 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 makes all the metrics. All right, let's go forward. That's kind of my approach. You really got to screen the operator, and then the deal is just, is it in the ballpark?
For sure. No, I think the operator definitely comes first. Couldn't agree with you more. I love that sheet that you're talking about, though. I feel like for a passive investor, especially if they're newer to investing, especially into real estate or into syndications, that's going to give them just a great place to develop more questions while they're interviewing an operator or talking about how they do deals and things like that. That's awesome. Jim, what's been the hardest part of this just syndication journey for you as a passive investor?
I think kind of finding my focus was part of it. Single family, multifamily, flipping, syndications that weren't quite right. So now I've found a focus, and I found a group of people who are also interested in learning and growing together. So that's kind of, there'll be other things that are difficult, but so far I find that I'm really passionate about real estate, and it took me a while to figure out, okay, where's the best fit for me at my stage? I don't want to be managing, syndications or flipping houses. I want to get a small group of syndicators that I know, like, and trust, and then just roll with them for the next, 10 years. That's my goal.
How do you want to hear, operators preparing for a downturn? So if you ask them, Mr. Operator, how are you prepared for a potential downturn? What do you want to hear that operator say? That's a really good question. I think what I want to hear them say is, we've built in redundancies into our models, and mostly, a lot of syndicators now are it's almost like flipping, right? You're trying to get out of the deal in 18 months, 3 years, trying to refinance or sell the deal to the next guy. So with that being the model that most people are after, I would want to know, does this deal cash flow? And if you can't sell it, and if you can't refinance it, will the deal still be good? And if so,
then you're fine. And I think that's the key, is if you are underwriting and investing for cash flow rather than for appreciation, then during the downturn, it doesn't really matter if the value of your property drops, because you're still getting the income. Now your income will drop a little bit as well, right? Because tenants might not be able to afford as much and all that. But the key is that you're still going to be above break-even occupancy if you've done the right underwriting. So I look at break-even occupancy, and just to make sure that they have a plan anticipating the downturn. If they say, oh no, everything's going to be fine forever, well then, I'm done talking to them and I'm not investing in their deal, so I don't have to really analyze it. It's just, if you're talking with the right people, that question, it can come up, but I'm going to have confidence that they're going to answer it in the right way.
So Jim, I believe anyone that's successful in business has a high level of self-discipline. How did you gain a high level of self-discipline?
Oh, wow. Well, like I said, I was chasing shiny objects, right? I think a lot of people in real estate have that. And what has really allowed me to focus, I think, is trying to help others and trying to build a community so that other people hold me accountable. Now if I do a deal that it just doesn't feel right, I have people to talk to. And in the past, I would have been like, it just doesn't feel right, but I have this money. I got to invest it. I might as well just do it. Well, now I have a group to talk to, and that can kind of steer me and help me maybe avoid some of those just leaps that I maybe shouldn't make.
What are a couple daily habits that you have that you're disciplined about that have helped you achieve success?
I think it's just, I try to, there's a lot of deals coming across my desk nowadays. So I try to look at a couple of deals every day and kind of put them through the analyzer, and I just try to maintain focus on what I'm doing. Because now I work for myself. I could take a week off and no one would miss me. So I have to stay focused on every day getting up and doing those tasks to make sure that I'm driving my business forward, that I'm taking the cash that I'm earning from these investments and figuring it out how to put it into the next one. So I don't know that I have specific daily tasks that drive me forward. I just have a goal. And that goal is, right now I'm using a lot of different syndicators. I'm testing out a lot of different people. And in, 2 to 3 years, my hope is to have 3 to 5 syndicators that instead of just putting in the minimum, I can put in larger amounts and have more freedom of time, right? That's the whole purpose, that people are working for themselves or being a passive investor, for freedom of time. So that's what I want. So now everything I do day to day is geared towards how do I get to my goal in 2 to 3 years of being able to be a passive investor who works a couple days a week rather than 5 days a week. I still will be interested in it. I'll still be doing it because I like it and because, I'm building wealth for my family. But I want to be to the point where I don't have to be sitting in my office every day. And that's kind of, every task drives me towards that.
As a passive investor, I've heard numerous of through that same process. Maybe they invested the minimum on a first deal or two with us a couple of years ago, but then now, they'll invest a lot more. And I've heard that same thing. They want to spend less time managing all that, right? Now that they've done a lot of vetting, in different ways. But so Jim, what's a way that you've recently improved your business that we could apply to our business?
That's a good question. I think the thing I've been doing lately is using Upwork to find VAs, virtual assistants, to handle things that I'm not good at, right? So we're starting a website for left field investors. We needed logos. I think 5-10 years ago, I would have sat down and tried to figure out how to do WordPress. And I used to do that actually every once in a while. If I needed a website, I'd try to do it myself. And, right now I'm paying someone else to do it. And there are, affordable, high quality people that you can get through Upwork or Fiverr that can do these things for you. So, you got to spend money on things that aren't your strengths so you can focus on what you're passionate about. And that's kind of how I've really improved my business, because I'm not getting down into the details on that. I'm someone else is spending their time on that and I'm just paying them for it.
What's your best source for meeting new investors?
Well, I think it's just referral based. I have this, we started this meetup in Columbus, Ohio that we got, it started from 4 people to 12 people. And now, pre-COVID, we had 60 to 80 people come to our meetings. And out of that, that was more for people that were flipping and buying and hold. That's what I wanted to do then. And so I kind of spun left field investors off of that. People I met there that were interested in, syndications and passive investing, I said, hey, you want to come along? And pretty soon, when you build kind of a quality group of people that are like-minded individuals, they talk to a buddy, and pretty soon that group grows. Now, we're just starting out, so I have no idea what we're going to do, what it's going to look like, or how big we're going to get, or how big we want to get. But right now, we're slowly adding a couple of people here and there who are interested like we are, and then we're just going to go with it and see what it turns out to be. That's the same thing I did with my last group that, like I said, we have over 500 people on our email list now, so it just kept growing. And that's kind of my approach to this is I don't have everything figured out, but I'm just going to keep plowing forward.
What's the number one thing that's contributed to your success?
I would say the willingness to take chances and go against convention, and building a network of people that, like I said, know, like, and trust. That's one of the big mantras of this business, and that's key to me. And then learning from people with more experience than I have, but also being open to learning from people with less experience. And that's where I think I've really grown over the last couple of months. I started a couple of these groups thinking, hey, none of these other people have much experience in passive investing, so I'm going to be sharing all my knowledge. And what happened was I shared all my knowledge and I got a bunch back. And so that's really, really helped me a lot is everyone, not everyone, but people are told, hey, get a job, put money in your 401k, retire, right? Well, there's other ways to do things. And you don't, if you get into real estate early enough, you could retire and just have passive income coming for the rest of your life. And so I'm really passionate about that. And so I think going against Wall Street convention is one of the main things that's contributed to my success of late. It's just to break out of the financial advisor world and dive into this where I can do what I want, make the money I want, and have real assets, again, producing real cash flow.
Jim, how do you like to give back?
That's, again, what we've talked about is, the thing I'm doing mostly is trying to build a community that helps bring others along and educates and exposes people to alternate investments. They call them alternative investments. It drives me crazy. It's the house you live in, the apartment you rent, the self-storage facility you put your stuff in. How is that alternative? I don't know, but it is. And so helping others build wealth with real assets, helping people learn how to invest in syndications and then investing alongside of them, or just helping them get started on their own. That's what I'm passionate about. And that's, the couple of groups I've started. That's why I want to grow those and expose more people to this, because as soon as they learn about it and they think, oh, wow, this isn't that hard. Why, I can do it on my own. So that's what I want to do. Build a community that helps others get exposed to these kind of things.
Jim, I'm grateful for your time today. I mean, it's been a great show. I mean, you've covered, just how you got into the business by accident. You mentioned, doing some self-managing, which you hated, and had some shiny object syndrome, which I'm sure we're all guilty of at one time or another. But you found syndications and you started educating yourself, but then, even educating us on how you've used, your IRA or the EQRP and some of those tools, to be able to invest with your 401k, and even outside of, syndication specifically, or is the tax, the loss of the tax advantages. But just grateful for your time, and then just how you vet an operator or look at a deal and the questions to ask. Thank you again. Tell the listeners how they can get in touch with you and learn about your community.
The best way is by email at jim@leftfieldinvestors.com. And you can also go to our website, but all it says is coming soon. So by the time this airs, hopefully we'll have some content on there. But as of now, the best way is just that email, jim@leftfieldinvestors.com.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.